To get into one of your stock calls, and we saw a big, massive, dump in the Mag 7 names. Some of these solid, tech companies. Nvidia got below $90 a share this week, Dory, and I'm just sitting there scratching my head because everybody called it expensive when it was trading $150. And then you look at their sales, you look at their earnings, you look at their growth. I know it's slowing, but it's still spectacular. But it seemed like some buyers came in this week in Nvidia.
Well, it's amazing how human every one of us is, right? I mean, I'm not going to lie. That stock comes crashing down in the low 90s and stuff. And I had to test my resolve, and I have to go, wait a minute, look at it. What's its exposure to tariffs? It's less than 5%. Some say less than 2%. And you're like, okay, I would kill to have this stock. It's on sale. But yet you will second guess yourself out of fear. Yeah. But it's nice to step up if you have a predetermined discipline. And I think that discipline comes not only from that stock, and how strong it is, and as far as earnings and returns and position in the marketplace, but confidence in history a little bit. So when you look at the VIX, anytime it gets over 40, right? Mm-hmm. Well, there's a 90% probability you're going to make money in 3 years, 80% in a year. And those returns range in a 3-year period, 50 to 80%. Those are great odds. That's just from throwing a dart. So when you can step into a good quality stock that has a higher beta, higher sensitivity, but they have the fundamentals of a NVIDIA, and we can kind of corner and bracket some of the exposure on the tariff side, makes it pretty easy to say yes.
Yeah, be greedy when everybody's fearful at this point. You have to go back to that old trading adage.
Timothy Arcuri, a UBS analyst, kept his buy recommendation on Nvidia at $185, a stable price target. Analysts have a high buy consensus for the $2.66 trillion semiconductor behemoth, with targets ranging from 115 to 220. Analysts claim that Nvidia has a flawless Piotrowski score of 9, which denotes extraordinary financial strength. Following the Taiwan Ministry of Finance's March export data release, which included numbers for automatic data processing equipment, Arcuri conducted his research. According to the report, ADP exports, which do not include laptops, amounted to $12.03 billion, a 20.6% increase over February's $9.97 billion. This growth marks the fourth straight month of at least mid-teens growth, even if it is marginally less than the usual mid-20s month-over-month increase anticipated for March, historically the strongest month of the year. A high baseline for the March numbers was established by the strong February performance, which witnessed a 14% month-over-month growth, as opposed to the typical 15% fall for the time. If April maintains its typical 36% share of total first-quarter exports, it might produce over $34 billion in exports, a noteworthy 58% quarter-over-quarter increase. It's unclear, though, how much of these figures represent actual market strength as opposed to tariff-related changes. According to UBS, Nvidia's data center sales would reach $42 billion in the April quarter, an 18% quarter-over-quarter increase. This forecast is in line with Nvidia's remarkable 114.2% sales increase during the last 12 months, during which time the business has maintained a strong 75% gross profit margin. Even if the latest data seems to be positive for Nvidia, Arcuri cautions that it has not always accurately forecasted performance in recent quarters, with differences occasionally amounting to the mid-teens. Furthermore, Taiwan Semiconductor Manufacturing Company, TSMC, announced sales for March that increased by 10% month-over-month, exceeding normal seasonal trends. Nvidia is a component of the semiconductor business, and this positive news from TSMC may be a portent of things to come. However, UBS's warning about the latest export data's predictive power points to a complicated picture for Nvidia's stock performance in the near future. Among the Magnificent Seven equities, Tesla and Nvidia have been leading the way in recent news developments. Following China's decision to raise tariffs on U.S. exports, which affected the profitability of businesses operating in China, Tesla announced a 2.0% drop in its shares. In the meantime, a brief lull following a notable market gain caused Nvidia's shares to drop 2.7% before the market opened. Analysts continue to focus on Nvidia in spite of this. TD Cowen raised its price objective to $140 while keeping its buy rating. Despite difficulties with its semiconductor suppliers, KeyBank Capital Markets kept its rating on Nvidia as overweight and set a price objective of $190. Both companies emphasize the significance of Nvidia's Blackwell technology in the next quarters, while showcasing the company's technological supremacy and long-term ambitions. The Magnificent Seven equities had a recovery, while Tesla saw a 2.7% pre-market increase as well. Additionally, Microsoft became the largest listed corporation in the world after Apple's market valuation dropped. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
And Patrick, I guess the question I have for you is, given everything that we've seen with regard to the damage in certain parts of the technology sector, is there any reason for medium to long-term pessimism? It just seems like this could be a blip on the radar right now.
Yeah, I think there's a great reason. I don't think the full force of the tariffs from China, our tariffs on their goods have completely hit home yet. And we're looking at it from two vectors and really fundamental, right? Increased cost of goods from tariffs and increased CapEx amortization that hit the bottom line, and then a decrease in consumption from higher prices. And the companies that the tariffs have really not been fully factored in are Apple, right? If you truly believe that the price of an Apple good could go up by 150% from a cost basis as it comes across the border, that's catastrophic to a company like this. And then you have companies that make notebooks. All companies who are making notebooks, it's built in China and will get hit with the full weight of that. There are some certain sectors, though, that I think midterm to long term are very good. I think the entire AI trade up and down is a good bet at this point. That is not going to change. You will have continued build outs of hyperscaler data centers and enterprises. And thankfully, most of those goods are covered by USMCA as they are manufactured in Mexico. But if we see some tariffs on semiconductors, literally all bets are off, and you will be seeing a lot of red in all of big tech.
I like the way you put that kind of so binary, Patrick, just to help us all capture this moment. So you say you think you could buy everything in the AI trade right now unless tariffs go on semiconductors and then all bets are off.
That's exactly right. And the reason you're not seeing all the hyperscalers get clobbered is most of their goods are at 0% tariff because their servers are manufactured primarily in Mexico, which is covered under USMCA. But yes, it will be a very big and deep red scenario if semiconductors are tariffed.
Most at risk, you think, could actually be a company like Apple right now. Is that right?
Right now, that's right. Even without a tariff off semiconductors, if you look at the way that their business is structured and how much of their manufacturing they do in China, we're not talking about a short term, hey, I have to make this shoe in a different country. It might take me 6 months to get set up. To significantly move volume from China to, let's say, Vietnam could take 3 to 4 years. It takes 1 million workers in China, which, by the way, Foxconn has to import workers from Malaysia to have enough workers to create those iPhones. It would take years. And the other element of this is it's not just planting a factory. You need the entire supply chain to plant their flags and build their sub-assemblies around that. And that takes years with a product like an iPhone.
Even if it turns out to be a short-term relief, President Donald Trump's administration's exemption of computers, cell phones, and other devices from the so-called reciprocal tariffs represents a significant reprieve for multinational tech companies like Apple and Nvidia Corp. By removing the products from Trump's 125% China tariff and his base 10% global tariff on almost all other nations, the exemptions, which were released by U.S. Customs and Border Protection late Friday, reduce the reach of the levies. Smartphones, laptops, hard drives, computer CPUs, and memory chips are all excluded. The majority of those well-known consumer electronics products are not produced in the United States. Customers will appreciate the respite, as several hurried to purchase new iPhones and other gadgets out of concern that the tariffs would drive up prices. It's also a huge victory for big internet firms that have promised Trump enormous sums of money in recent months. Global markets were rocked by Trump's tariffs, which also caused a stock market meltdown and sparked a swiftly intensifying trade war with China. The action marks the first notable easing of Trump's stance toward China of any type. April 5th was the backdate. Speaking to reporters on Air Force One earlier Friday, Trump praised his relationship with Chinese President Xi Jinping and said, "Honestly, I'm very comfortable now with the tariffs on China, and I believe that will result in something good." The reprieve from tariffs might not last long. The exceptions are a result of the original ruling, which stopped additional tariffs on specific industries from building up on top of the national rates. The exclusion indicates that a different duty, most likely a lower one for China, may soon apply to the products. Semiconductor manufacturing equipment is one of the goods that will not be impacted by Trump's new tariffs. For other chipmakers, including Taiwan Semiconductor Manufacturing Co., which just announced a significant new investment in the U.S., that would be crucial. The notice said that the reciprocal tariffs would not apply to any goods that were appropriately categorized under the aforementioned regulations. The action seems to exempt the goods from the 10% global baseline duty imposed on other nations, including South Korea, the home country of Samsung. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I mean, how do you think this is all going to shake out? I mean, I just had some guests on who say tech is the place to be. It's your wheelhouse, obviously, and a lot of these stocks have gotten cut down pretty well.
Yeah, I mean, like as an investor, we're looking to invest in industries, sectors, companies that makes products that are, one, difficult to compete with or to replicate, and two, that companies that innovate faster than their competitors. And to us, that tends to scream technology. That's also the sector that we spend all our time in. But we feel pretty good about where we're standing. I'd say, similar to what Tom was saying a few minutes ago, the semiconductor space, I think, we've seen those stocks marked down. We look at the AI race and the companies that are buying those semiconductors to harness AI. And those companies that don't buy those semiconductors, that don't rent them, that don't build those applications to participate in AI are going to fall behind and lose out to either new players or their existing competitors. So we look at microprocessors that make all this possible, the brains of those servers that serve up these cloud AI services from NVIDIA, AMD, Broadcom, and say that's the place I want to be. Those are the hardest chips to make in the world. And we want to own those companies. We want to own Taiwan Semiconductor, which is the company that actually makes all of those chips physically in Taiwan. And we want to own that company. And, as the quote you just put up said, it's impossible to avoid shipping those chips in from Taiwan. And so I think that this is a sector that's going to get treated well by the Trump administration.
As an investment manager, how are you viewing all of this? I mean, I've seen, a post at least of yours on social media about the tariffs, obviously not being in favor of what the administration has done, but the bigger ramifications of how all of this is playing out and how it all went down, you're having to make your investment decisions based on the unknown.
Well, I'll clarify that. I mean, I think that President Trump and the administration, they're attempting to restore the economy by doing three things: fixing government fraud, waste, and abuse, right? I think we can all agree we've got major problems there. We're demanding that our allies take on more of their own defense spending. I think that's a fair request. And third, we want to reduce the unfairness in global trade. I think that's a rational goal. I mean, when I travel around the world and I talk to U.S. companies that are trying to access some of these foreign markets, it is unfair. There are unfair tariffs, there are unfair barriers, there's theft of IP. We've got to eliminate those things, reduce and eliminate those things. So I think the administration's efforts in trade come from a rational place. The problem is that it's the implementation that has been so off. We've taken a mercurial approach to solving this problem with tariff levels that are so damaging, neither side, us or the other side, could live with them in order to, in theory, force speedy negotiations. But at the same time, you're upsetting the entire capital markets and causing interest rates to fly up. And this is a policy error. So we need an administration. We need a little bit more sage kind of behavior, the kind of talk that Ted Pick or Jamie Dimon have when they speak to market participants. And, we need that kind of negotiation and that kind of behavior as opposed to tough, bombastic talk in the Rose Garden.
A separate Trump tax on China, a 20% duty imposed to put pressure on Beijing to crack down on fentanyl, including the shipment of precursor ingredients, does not seem to be covered by the tariff respite. It also seems that other tariffs that were in place before Trump's current tenure are unaffected. In a research note released on Saturday, Daniel Ives, an analyst at Wedbush Securities, said that although there was initially a lot of opposition to exclusions within the White House, the U.S. tech sector has a loud voice, and that the Beltway finally recognized the situation's reality. With these China negotiations, there is still a lot of unpredictability and instability to come. Central processing units, or CPUs, were among the semiconductor items that were initially free from tariffs. However, those policies did not exclude technology that is essential to the development of AI, such as graphics processing units, GPUs, and the servers that run them. Taiwan and Mexico are the main locations for the production and assembly of servers with AI chips from firms like NVIDIA and their essential parts. The declaration on Friday would include output from both Taiwan and Mexico, which is a huge relief for businesses looking to establish AI infrastructure in the U.S. New exemptions on semiconductor production equipment, granted by businesses like Tokyo Electron Limited in Japan and ASML Holding NV in the Netherlands, are also quite important. These instruments, which make up the majority of the multi-billion-dollar price tag for such plants, are necessary for constructing chip manufacturing. The 2022 CHIPS and Science Act is helping companies like TSMC, Samsung, and Intel Corp. construct new facilities in the United States. A spokeswoman for Nvidia declined to comment. Requests for response were not immediately answered by Tokyo Electron and ASML spokespeople. Trump has frequently promised to impose a particular tariff on semiconductors, which was one such sectoral exclusion. Although he hasn't done so yet, the most recent exclusions seem to support that exemption. The action exempts the majority of Apple's essential products, such as iPhones, iPads, Apple Watches, and AirTags, from the rising tariffs on China. AirPods are not included. Following Trump's announcement of the tariffs, Apple's stock has fallen. Since Trump raised tariffs on China, which put businesses like Apple in a more challenging position than rivals like Samsung, who are less dependent on China, discussions have become more urgent. According to a person familiar with the talks, businesses and advocates for the IT sector have also claimed that it is not feasible to reshore the final assembly of smartphones and other devices. However, the action also aims to set the stage for future targeted sectoral levies that are anticipated to be imposed on the industry. It is anticipated that the government would shortly begin a new inquiry into semiconductor imports. Within weeks, tariffs on chips would be imposed as a result of that. Similar to the charges recently imposed on steel and aluminum, those duties are probably going to be applied to both the chips themselves and products that contain semiconductors. Wendy Cutler, a former senior U.S. trade negotiator who currently works at the Asia Society Policy Institute, stated that product exclusions are happening sooner than anticipated. According to Cutler, the action would affect the talks the Trump administration is starting with other nations as part of a 90-day halt to some of the new tariffs. The ongoing 90-day negotiations will now get more complex as other businesses and nations step up their efforts to obtain their own exceptions. Trump has put his sector's tariffs at 25% so far, but it's unclear what his rate would be for semiconductors and similar goods. Furthermore, it's unclear how broadly he would enforce that tariff. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
KG, I just wanted to get your take here real quickly on the equity markets because we're starting to see green across the screen. We've got some nice solid gains for the week. Volatility's falling off. We got the VIX below 38. What's your take?
Yeah, I mean, it's a decent setup for right now, right? As you kind of talked about, every sector in the green. You have around 88% of the stocks in the S&P 500 moving to the upside. The advancing minus the declining stocks continue to move to the upside as well. So that's a pretty good look. So we just got to hold this into the close here. And I think right now what we're kind of seeing is really kind of a battle right around this 53.60, 53.70 level. And over the last 3 or 4 candles, we have had some bearish candles kind of showing up, but obviously the primary trend is still to the upside. And Tom, I think unless you break that 53.15 going into the close, I think this is actually a pretty decent setup for the S&P 500 just in general. To the upside, 5,400, we have a lot of positioning there on the call side. Not seeing a lot of premium there, so maybe we do not try to hit that level. Anything's possible, but it's fairly cheap, and usually 30 minutes left to go in the close. There would be a healthy amount of premium up there if we were going to try to see a major squeeze to the upside here. 53.40, obviously keeping that on the radar. We have been utilizing that as an area of support pretty much for the last 2.5, almost 3 hours now. And then if we have any type of breakdown below 53.15, you're looking at 52.20. But what you did talk about is the VIX, though, and I think that's actually a really important thing. Not only when you're looking at the spot VIX and looking at where it's at right now, but also looking at the backwardation, the VIX minus the front month future. And as you kind of talked about, it has fallen off a cliff. I mean, earlier this week, we were sitting at around a 14 and a half backwardation level there, just implying a lot of near-term uncertainty. A lot of that uncertainty is being backed off, and it's being backed off of the front month, or basically the VIX contract, the VIX, and you're starting to see a normalization of the curve. I think that's really a good thing going into this weekend, trying to see volatility kind of crush here. And you want to continue to see that move to the downside. And I think that's going to be a really decent environment for maybe a little bit more continuation going into next week.
Yeah, you bring up a good point, KG, because I think that was one of the things we talked about earlier on Fast Market, was the fact that some stabilization would be really nice for these markets. Get a little bit more depth between the bid and ask on whether it's futures or the individual stocks at this point. But going into a weekend, I would expect to see maybe some selling in the close. Do you expect that at all? Maybe some of the levels going into it as far as market on close type of orders that might. Hey, maybe people want to push back here against maybe some of the bullishness that we've seen over the last week or so.
Yeah, the market on close numbers have been very hard to really pinpoint, obviously, because we have so much volatility here. I would say probably for the upside, we probably would see more of a buy imbalance rather than a sell imbalance. Yes, we have the overnight and weekend risk going into the market, but you also have to think about the shorts as well, right? The shorts have seen one of the biggest positive gains that we probably will see in my lifetime, hopefully. Maybe we see another one, but a very aggressive increase over this week. And then also it seems like, and we don't know yet, but it seems like we're on the back end of this whole thing, at least for now, even if we do not see any type of response with China, and that becomes kind of something that we just don't talk about over the next couple of trading sessions. I think that actually would be very conducive for the market to try to move to the upside here. Also looking at maybe some potential announcements early next week or even this weekend from the White House could also bring us a little bit higher here. So are we stretched given the volatility that we've seen, Tom? I don't think so, right? Even 2% to the upside, it's kind of like, it seems like it's appropriate for all of the news flow that we've had this week and the sentiment that has shifted pretty dramatically.
When you look at yields, that was a big problem earlier this week. Where, I mean, even today, KG, I mean, the 10-year got above 4.5%, nearly 4.6% today, and it feels like that weight on treasuries, that weight on the dollar, where maybe overseas buyers are kind of drying up here a little bit, trying to put pressure maybe on our economy here a little bit, but that's not conducive to seeing rallies in the equity market when you got those yields rising at this point, even though CPI, PPI are good reports.
Yeah, it depends on, and it also depends on the curve, right? I think this week what was a little bit different is the yields weren't moving in unison. We saw a lot of fracturing within the yield curve just in general, which signified that we had a little bit of lack of liquidity. My biggest, thing for the bears for next week, you do have a bearish engulfing candle on the weekly chart for the 10-year futures. Okay, so that is something to keep in mind. We had that stochastic forming a bearish cross on there as well, which means prices are going down prices going down, yields are going higher here. So this is one of those things that we might still see yields move to the upside over the next couple of weeks. I would not be surprised by that. But what actually happens between the 2-year, 10-year, and the 30-year, I think, is really what's going to show us if there's lack of liquidity, or if we are seeing a continued unwind, are there foreign sellers in the market? If we start seeing that boogeyman come back into the picture, Tom, I think that's where you see a lot more pressure for the equity market as a whole. On the weekly chart for the equities, if you're looking at the S&P 500, we actually have a pretty decent bounce off of the primary trend line that we've seen since the October 2022 lows. We were able to defend that this week. We still have 2 waves in this whole 3-cycle or potential 3-cycle wave pattern kind of taking place here. So I'm still a little bit more cautious that we might get a counter trend bounce and then move to the downside. But it's hard to ignore that RSI that was in oversold territory now getting into a little bit more of a bullish sentiment indicator, if you will. But MACD is probably going to cross next week. So overall, I would look for a little bit of a bounce for next week. And then the end of next week, I'm looking for that death cross on the daily chart where the 50-day moving average moves below the 200. Let's see what the algorithms as well as the technical traders do once that indicator does flash that bearish signal.
Yeah, bringing up the death cross here, Kevin. That's not helpful for my psyche going into next week. But if you take a look at it, KG, I think one of the things that a lot of traders, investors out there are thinking about is, hey, you know what? The fundamentals are there. We're going to start getting earnings out. We're going to get some clarity on what companies are doing, what they're going to say. But at the same time, when you have this headline risk where a tweet can come out, a headline can come out, commentary can come out of the administration, that also throws a wrench in. So, you think that VIX is going to go back down to the 20 level? Probably not in the near term, right?
It might. I mean, we might try to test it. It would also be a little bit odd that we actually stay above that 40 level for 2 or 3 weeks in a row. It usually doesn't happen unless we actually have a big economic downturn that we're trying to trade through, Tom. So, I think the biggest thing that we have to think about is fundamentals, as you kind of talked about. What are valuations? What are you willing to pay for a stock? Just know that this time around is going to be a little bit different. You have Doge cuts. You're going to have cuts to fiscal spending. You're not really having the monetary support when it comes to the Fed. They don't really want to do anything right now until the data really reflects otherwise. And then you have tariff policy, which is going to dampen consumer demand. So there might be some value and some bargains here, but it makes it really hard to make the valuation case for us hitting all-time highs, given the fact that we're just not going to have the money within the financial system sloshing around like we've had in the past. We need to have something a little bit different. And I just feel like over the next couple of weeks or months, when we hear these earnings, probably a lot of question marks when it comes to forward guidance, as well as CapEx spending strategies moving forward. So right now, good counter trend bounce, find some value areas that you're willing to hold for the long term. But I still think that we're not out of the woods here yet. I think we're close though, Tom. I do believe that we're close, but I don't think we're out of the woods yet when it comes to volatility.
Yeah, you expect maybe guidance to get lowered across the board. I mean, the forward-looking PE for the S&P 500 is still around the 20 level at this point. So will revisions happen? And is that already baked into a lot of the stocks, Kevin, that have pulled back into bear market territory? We've seen that across the board. So, yeah, a lot to dissect over the next few weeks here as earnings season ramps up.